you could see a case where if you have a limit of, say, $50 million, yet there is a significant price movement, even intraday, you may have insufficient limit.
It's time! Work, play, evolve!
I want to connect the listeners to the best of the best. Welcome to the Evolved Broker Podcast. I am your host, Pat Costello, the co-founder and principal at Evolve MGA. Our mission for this podcast is to bring the insurance industry the best of the best. In this episode, I spoke with the co-founder of the very first cryptocurrency insurance firm in the world. His name is Raymond Zenkich, and his firm is called Evertas. Evertas received $14 million in Series A funding the day before we recorded this episode. Raymond is a very interesting guy. He ran the first insurance and blockchain conference in North America. He's had experience at larger firms like Accenture, McKinsey, and has also run consulting, SaaS, and insurance businesses. He has served as a professor at Northwestern School of Law as well. Just so you guys know, Evertas is a pioneer in the crypto asset insurance market. They can write and service policies ensuring custodial crypto assets and blockchain infrastructure. So bleeding edge insurance. I was super interested to learn more about their company, especially with the recent bankruptcy of FTX, which was the third largest crypto exchange. Without further ado, here's Raymond. Raymond, welcome to the Evolved Broker Podcast.
Thank you, Pat. Great to be here.
You are the co-founder of the world's very first crypto insurance company. That is epic in itself, but by chance, you guys also closed $14 million in funding yesterday. Is that correct?
That is, yes. That's very exciting news for us.
Congratulations. Yeah, I wanted to bring that up. The timing for this is ideal, and it should be released about a week after we record it. So I think we got a lot of really cool topics to go through. Before diving into the background of the company and funding, I know we have some listeners that are very new to cryptocurrency in general. Before we get to cryptocurrency insurance, I'm hoping for the audience, you can just break down in really simplistic terms what cryptocurrency is for those who are unfamiliar.
Yeah, it's interesting. Back when we started in 2017, I had set up one of the very first insurance and blockchain and crypto sort of oriented conferences in North America. And we had about 150 people attending. It was really quite interesting if you think about it. So, 5-6 years ago, insurance executives, delving into the world of blockchain and insurance and crypto assets. And I asked the group, how many of you, own cryptocurrencies? And there was about 5 to 10 people out of the 150 that sort of raised their hands.
Okay.
And then, since then, and actually about a month ago, I gave a very similar discussion at a panel and asked the same question. And more than half, probably 2/3 raised their hands. So it certainly was a much higher level of, I'd say, awareness and participation in cryptocurrencies. To answer your question around what cryptocurrencies are, and I would certainly encourage people, there's a lot of cryptocurrency 101 type of information and education material out there. The intention here is not to go too deep. But what I certainly can say to you is it's really, and talking about cryptocurrencies, you do need to kind of think about it in the context of some of the underlying technologies like blockchain, decentralized infrastructure.
Mm-hmm.
It is, a way to essentially create and have value in a, for lack of a better word, a digital form, a digital currency. Now, for some of the purists out there, I recognize that I'm treating this with a bit of a broad brush. However, when people think about Bitcoin or Ethereum, these are some of the larger cryptocurrencies out there. They're oftentimes viewed as just highly speculative investments.
Right.
Yet I would say that the real power of Bitcoin, Ethereum, cryptocurrencies, and I would argue digital assets, it really goes back to, what are they supporting? What type of businesses can they support? What do they represent? And I would encourage people who are thinking about, cryptocurrencies or blockchain to think about them together and to really understand that they are, in some cases, solving very specific problems to an industry. In some cases, they're solving a very basic issue of providing access or means to exchange value between people, no matter where you are in the world. And so, again, I'd encourage people. There's a lot of good educational material out there that go look at to get the deep dive, like the Blockchain 101. I've given many of those, but given that this is really meant to be more of an insurance broker discussion, what I can tell you is that what we see quite often is, retail brokers who have, let's say, crypto-oriented companies approaching them, looking for things like D&O or E&O coverages, and then quickly, depending on their businesses, looking for things like theft or loss insurance.
Yeah.
And the very first challenge that comes up is, this is an issue from an underwriting perspective as well, is just understanding the business. Like, what exactly does the company do? And from there, this does tie back a little bit to your question around what are cryptocurrencies. You need to understand the risks, right, that the insurer is looking to have protection for. And so for us, that's really the starting point. And the challenge is that, cryptocurrencies, the crypto asset industry, while it's been around for, let's say, more than a decade, there's not a lot of industry knowledge and experience out there. So if you're a retail broker who happens to understand a lot about crypto assets or the crypto industry, it's probably because you're interested yourself, right? You've been looking at it. You may own some cryptocurrencies. You've been, trying to build up your own level of education. There isn't, insurance industry level material out there. There is some actually coming online. But the reason I highlight this is that it can be a real challenge if you're a retail broker and don't have a lot of depth in the crypto space to understand not only what the crypto company you're talking to is doing, let alone the risks. And so our underwriting starts with, understanding the underlying business itself. So if you're a retail broker dealing with a startup in the crypto space, that's got some funding, get your hands on the investor material, right? Understand how they're describing their business and how they've received their funding. And from there, you can then start to, engage firms, like Evertas. And we focus exclusively on institutions. We focus on underwriting. We can really help understand the needs of the insured, obviously working closely with the broker. And that just takes a lot of, in some cases, technical understanding and expertise that we bring to the table. So it really comes down to the business, the technology, and then the people and the processes around it.
There's no doubt that you guys are filling a huge market need. In my experience, almost every market that I've come across has excluded cryptocurrency as a class in general.
Yeah.
So I'm
sorry to interrupt you. I was going to just say that that's a very common experience. A lot of for the retail brokers in the audience, you may already know this, but it is very difficult to obtain, for example, D&O coverages if you're operating in the crypto space. Very few options available. We, Evertas, we're a Lloyd's cover holder. We have access to A+ paper. That is our initial offering in the market is a crime or a theft product. And we will have some very exciting announcements early next year, to start addressing other needs of the market. But with so few options available, what we want to do is we want to help the retail brokers grow these portions of their business and help them understand and learn as well.
Raymond, tell me why and how you guys decided to start this company.
Yeah, I mentioned earlier, our journey started back in 2017. My co-founder was leading up the blockchain team at one of the world's largest global custodians. And they at the time were looking for insurance. And there was very few options available. For myself, I've had an insurance background as well as technology background, and was personally very interested in blockchain as its enabling technology, what you see sort of in Web3 today. And given my insurance background and experience, we had gotten together, we met at a conference, and so we quickly realized that while this asset class was growing very quickly with a lot of interest, the insurance market was almost untouched. And there are, I think, a lot of interesting reasons why, some of which go back to just, go back 5-6 years ago, very little true understanding of the technology and the operational needs, as well as the businesses. And so capacity providers, at the time and still lack the in-house knowledge to be comfortable to deploy more capacity. So there's really a case where demand, there's a big disconnect. Demand is certainly there and growing, yet the capacity providers, even insurers as well as reinsurers, are somewhat hesitant to deploy more capacity. They're still waiting for the market to evolve. There is no historical data, right, or very little. We actually have been working on building a loss event database with over 1,200 events right now. So we're trying to categorize events to really start to understand and build that underwriting data required to support a good understanding of expected loss ratios, for example. So a lot of this information is hard to find. You're not talking about auto or home. We have lots of, hundreds of years of data in some cases. It's just not there. So that's where experts like Evertas come to play, is because we are providing that specialization. We focus exclusively on crypto assets in the crypto asset industry. Being one of the first insurers in the space, sort of crypto asset insurance companies in the space, we actually have done several things. So for example, we have a Class 3A license in Bermuda because we know that there is a need for capacity in this space. So we're looking to build out that facility. So, our journey started by recognizing that this is a new and growing industry and asset class. With it, you'll expect to see lots of infrastructure put in place around it, like custodians, and insurance. And insurance it's been a long road to try and get the underwriting which we built to encourage capacity to come to market, to make an industry comfortable in addressing these risks.
It's super exciting. You guys are definitely pioneers in the space. I want to talk about the insureds and nail down exactly who they are. So if there's a broker that's listening to this and they have a potential client that could come your way, is it individuals or is it exchanges that would typically buy a policy from you guys?
Yeah, so we focus on institutions. So think about custodians, exchanges, funds, corporate treasuries, family offices. Another way you can think about it is we do not focus on retail directly. Indirectly, we can address them by, we built platform policies. So if you are a custodian and you want to offer a way to have your customers have access to insurance, you can do that through some of the vehicles we've built. But again, we go through market as an MGA. So we are working with the retail brokers. So the focus we have is institutions, so think companies of the type I mentioned.
Okay. Can you throw out maybe some examples of the institutions or the exchanges that you guys might cover, so people can get like a very clear idea?
Yeah. So I can't talk about specific insureds, obviously, and who we've underwritten, but just think about, if you think about large custodians or exchanges in the news, these are institutions that are like, or perceived as almost like banks, right? So you can, custodians like say Coinbase, for example, right? They or Gemini, they allow people to typically, if you want to send fiat like US dollar, you can convert that, you can exchange it to other cryptocurrencies, and they will custody the private keys for you for those assets. So they, as a custodian, have the care, custody, control of those assets. There are other infrastructure providers. So some custodians, and I won't go into too much technical detail, but some custodians or people who go to market as custodians, they themselves may use third parties for all of the actual implementation of the custodian. They have the actual care, custody, and control that technically is outsourced to another provider. So they are like these, think of them as infrastructure providers. They have a similar liability, right? Again, if the private keys are lost or stolen, that's an issue. If you think about just funds, right? So if you're an investment fund, and we've seen a massive increase in the amount of investment funds seeking to invest in crypto assets. And they have similar issues that a custodian would, which is, well, because a fund and because of the way crypto assets and blockchain in general are implemented, you can self-custody. Right? You can essentially maintain your own care, custody, control of assets. So for funds, if they're doing it themselves, or if they're using a custodian or exchange, they have the same risks, which is, okay, well, what happens if there's a rogue internal employee, for example? You want an ability to manage that risk. Corporate treasuries, right? So think about large companies like some like Tesla, for example, had made announcements about owning certain crypto assets. Those corporate treasuries have the very same issue, right? Around what do we do in the event of a theft or loss of the crypto assets? And that does tie back to how they're custodying those assets. Family offices, some larger family offices, say larger than $5 million, typically are looking at investing in crypto assets. They have the very same issues around the custody of them, the custody of the assets, and therefore what type of protections or how do you want to manage the risk around theft or loss of those assets. So again, kind of recapping, you have custodians, you have exchanges, you have investment funds, you have corporates or corporate treasuries, offices, and then family offices. So and that's a relatively wide set of potential insurance. And there can be companies today who, may own crypto assets and don't even realize it. They may have made an acquisition, right? And there may be a company in their portfolio that has crypto assets. And so how do they want to custody those assets? Again, self-custody, work with an outside party, and then all the similar issues around the risk of theft or loss and how is that managed?
Okay, that's a really good breakdown of the appetite and the potential insurers that you guys are looking to write. I want to talk about the policies, and I want to start off with what are the specific things that you guys are covering within these cryptocurrency institutions?
Yeah, I want to answer that question, but I do want to come back to I wanted to highlight this gap of capacity, because I think while there's a huge opportunity, what I wanted to stress is if you look at the size of this market, call it roughly $1 trillion plus or minus, there's only a small percentage of that is available in capacity. So less than $5 or $10 billion of capacity. So the moment you understand how little capacity is out there and how large this asset class is, it really highlights the challenge for the retail broker. Because you not only have to understand this new asset class, you got to find the markets like Evertas to help solve the insurance that the insurance needs. You asked about the actual policy.
Yep.
And I'd say that's really at the heart of what we've been building. So what you find today, and this comes back to the state of the industry today, what you find is that, especially in the area of crime, so like theft or loss, what you find is that many of the policy forms that are being used are essentially repurposed crime forms where they've tried to modify language in a manner that can sort of address some of the crypto related risks, but they usually end up being, well, we've seen cases where they are, I'd say, technically incorrect, and I'll give you some examples as to why, or legally ambiguous. And that we don't think that's the right answer for the industry. What we want to focus on is being very transparent and making it very clear what is or is not being insured.
Great.
That we think benefits the insured ultimately.
Oh yeah.
Because in a situation where there is a claim, look, it should be quite. You want a bright line, just in the sense that, look, insurance are sort of two sides to an insurance contract, and yeah, there is a valid claim, you want it paid out, right? You don't want to be spending years in litigation over it, and the way you do that is by essentially making sure the policy form is purpose built, and that's what we've done. We spent the first year and a half really investing the time in the very unglamorous world of policy language. But it was really important because we built it from the ground up as being a crypto-focused policy. And that's really important because we're using that, and you're going to see some of these newer products next year as a foundation to build other products. So again, the policy form is building clarity. I mean, we're defining a digital asset loss event. It's very clear what that means. We're defining terms that, at least to date, have been used very loosely in this. For people in the audience, you may have heard of terms or seen terms like hot, warm, or cold storage that are being used or discussed in discussions with an insured.
Mm-hmm.
Yet those aren't legally defined terms. Those aren't really terms of art that you can point to and say, look, well, everyone knows what hot storage means. Everyone knows what warm or cold. They don't. And so we're doing much more, I would say, in terms of education for retail brokers to make you more, give you the skills and the tools to be more effective in your discussion with the insureds. Because, at a very high level, cold storage can be viewed as something offline, like a USB drive.
Mm-hmm.
Hot storage can be viewed as something, I'm speaking very generally, as a computer connected to the internet. Warm storage introduces certain elements like HSMs that can sort of bridge this gap of allowing greater or faster access to assets that might be online. But the point is that the terms need to be defined, and we've done that. They're actually defined in our policy, and we put them on our website. We've said, here is how we think about hot, warm, and cold storage and how they differ. And historically, just so your audience knows, the speech market in London for many years has really served an important role in supporting cold storage. It was very similar to vaulting. And the speech market has been evolving as well to address other types of storage needs. But it's important to have some of that context as to where or how at least different type of storage types or risks were being managed and addressed into the insurance market. There's much more prevalence of warm storage today. And there's a lot of variety in how warm storage can be implemented, which we think means you need to have an underwriter who understands how a custody system is being implemented to make sure the risks that want to be addressed are being addressed. So, it's coming back to your question around what's being covered, or the policy itself. Currently, it's theft or loss of digital assets. That's our focus.
Okay.
And that builds a foundation for us to introduce other products that you'll begin seeing later next year. And it's also, we think, the hardest one to underwrite. So we've spent years underwriting in this space. We have over 20 categories of risks that we look at. We really, in the risks, I mentioned some of them before, they touch on the technology, which you would expect to see. But we also look at the business, we look at the operations. All those together are really important. And the power of what we built has allowed us to bring risk solutions in cases where the insured and the retail broker did not think there was a solution. I'll give you an example. We had an insured, and the retail broker was discussing with us the technical implementation, and the view was that it was a hot storage type of solution that they had built. And again, these terms are not defined. You really have to get under the covers to understand what they are. From our perspective, it was more of a warm storage implementation. Now, these aren't just words. the semantics actually are important. Hot storage, which if you think about, internet connected to the internet, could potentially be at higher risk.
Yep.
Those raise lots of questions from an underwriting perspective. It's perceived as being of higher risk, and the rates may reflect that. Whereas warm storage, can be perceived as, and I'm using air quotes, sort of less risky. But my point is that there are impacts in terms of underwriting and the rating, and we were able to help them understand that this is in fact a warm implementation, and therefore our policy, and together with our carrier partner, we felt that it could be addressed. So this is where having a good policy form and strong underwriting can actually bring solutions to the table that may not have been there originally.
Okay. What do you think the average premium size will be, and what is the typical limit? So it's probably a longer discussion. I can tell you that today, I can answer the question this way. If you're looking for a theft or loss policy, let's say in the several $100 million range, which would be a larger policy in this space. Let's say something in the $500 million range. That would be a very large policy. Mm-hmm. And you're talking limits. What's that? You're talking limits? Right. Yeah. Limits. That would be a very difficult policy to place. You would have, it's a very large tower to get all the capacity lined up. Mm-hmm. There's a handful of those. As you start looking at lower limits, like let's say around $100 million or $50 million or $5 to $10 million, what we end up seeing is typically startups or newer crypto asset firms. They're kind of in the $5 to $10 million limit range, I would say. And then what they're doing is they're poised for growth. And so while those initial limits might be quite low, from an underwriting perspective, we understand what their strategy is, what they're trying to do. So we are underwriting with an anticipation that there's going to be increasing limits. One thing I probably should focus on, or at least bring up, because it comes up a lot in our discussions, which is, and again, it's an area where the industry will need to innovate, is the limits being in fiat or US dollar, whereas the actual assets might be in the cryptocurrency, like in a Bitcoin or Ethereum. Mm-hmm. So today, limits are in fiat, so they're in dollar. Okay. There is a need for solutions that provide for limit in the cryptocurrency. Interesting. Premium in the cryptocurrency, claims paid out in the cryptocurrency. And the reason for that is to eliminate the FX issues that come up. So there are some solutions emerging. Certainly stay tuned to into this space early next year as well, or next year. But that, we think, is where the industry needs to go, because the FX issue, it becomes an issue because your need for your limit could be changing daily depending on how much activity there is in the market and what you're trying to do. So I just wanted to mention that when I'm talking limits, I'm talking about fiat. Dollar. Right. Can you go a little bit deeper into the FX issues? Yeah. So it's a case where the assets being custodied are like Bitcoin or Ethereum, mm-hmm. Yet the products of the insurance policies, the limits are in dollars. So you could see a case where if you have a limit of, say, $50 million, yet there is a significant price movement of the underlying asset, even intraday, you may have insufficient limit. Okay. That makes a lot of sense. Similarly, if there's movement down, you may have too much limit. Too much. I.e. you're over. Yeah. So this is the FX issue I mentioned. And the way to solve that is to have insurance products that are crypto denominated. Okay. Yeah. That is super, super interesting. Okay. So ballpark, if you had to give me a premium, if I was going to buy $1 million limit, Do you have an idea of what an insured might pay for that?
Yeah, so I think the rough guidelines we give, and some of this is available publicly, is and with the biggest asterisk being dependent on the underwriting, right? So this is a case where you've successfully gone through underwriting, you understand the risk. You're typically in the 2 to 3% range. So 20 or 30,000, per million.
Okay.
Is the at a starting point.
Of course.
And pricing typically moves up there depending on typically credits or debits, so underwriting or the rating plan.
Okay. Got you. Well, that's really interesting. I appreciate you breaking down the insureds, how the policies work, and what you're looking to cover, and how specific you're looking to get there, along with the premiums and the limits, and those FX issues are super unique as well. Very recently, the third largest crypto exchange, FTX, went through, or is currently going through, bankruptcy. I'm really interested in your thoughts on this because you're kind of living in this world and you're analyzing these institutions. For those that have not heard about this story, I'm hoping you can break down what happened and give us your thoughts.
Yeah, I'm not going to be the best resource to describe what happened. There's a lot of publicly available information about that out, and just point people to those things. AM Best actually had a very interesting write-up last week for people in the audience who want to look it up. They said that while FTX wasn't an insurance company, they really highlighted several deficiencies that were sort of lessons to be learned that insurers should take notice of. Publicly, you can, again, using public information, you can look at, lack of governance. I think the AM Best highlighted difficult not knowing all the facts when looking at what the new CEO has described in terms of lack of internal controls, inexperienced management team. These are all things that would be red flags for even a smaller crypto exchange as well, if you're thinking about just D&O coverage. I think that if I take a step back and don't really focus on an FTX and just ask, what this means for insurance and what it means for the crypto asset industry, it highlights a real need for professionalism and a role that insurance can play, which is, we would argue, much more responsive and dynamic than perhaps what a regulator could put in place. This space moves daily. And if you think about what an underwriter can do, you're providing a third-party view into an entity, an objective view, and you're touching on really important areas of risk. And what's important here is that underwriter, the insurer, has a financial incentive to get it right. And that's where we see the role of insurance as one that's played throughout time, is being able to bring a level of professionalism and accountability to new or emerging industries. There have been many times where we've gone through underwriting and through that underwriting highlighted very important issues in terms of the operations or the technology that need to be addressed before insurance can even be considered. So it is a way to bring some notion of standards to an industry that today is unregulated and does not have a lot of standards in place. On the standards front, we're also doing a lot of things. Again, look, you'll see some more announcements from us next year. In the similar area of education, and trying to put some stakes in the ground around how, what are there proven practices out there that we think it's important to communicate, broadly speaking, to industry. So, FTXs, would understand so you as a customer would understand or have a much greater degree of understanding as to how your custodian is operating. And I think that insurance, we've dealt with institutions who said, look, we view having insurance as the most efficient way to communicate to our customers that we're well run. So again, it's that third party objective outside you coming in and providing an assessment of operations, technology, and the business.
Okay. So in the scenario that went down with FTX, obviously a lot of the details are still coming out. It sounds like there could have been some fraud, there could have been some theft. Is there anything that happened in that situation that would apply to what you guys are looking to cover with your crypto insurance policy? Is there any overlap there?
Yeah, I mean, again, those are all allegations, obviously. Anytime D&O policies, would look at some of the management issues that you touched on. Anytime you have fraud or criminal activity, that can sort of that has a big impact on the insurance policy, obviously. And it also has a big impact on the recourse for the customers. And that's ultimately, you don't want to lose sight of the fact, right, that there are customers who want to understand what happened to their assets.
Oh, seriously.
Yeah. And so again, not knowing the specifics of FTX, I wouldn't want to guess or to to put something out there that, again, don't knowing all the facts. But what I would say is that the role insurance, can play and should play going forward is to provide that outside view of, for example, looking at the management team, asking questions around, okay, what is the committee structures? How often are they meeting? Really just basic questions to get at, is the company well run, right? Is the management team experienced? The fact that it was based in the Bahamas, I mean, you could ask yourself, is that the right jurisdiction you want to be operating in? There's other reasons as to why they chose the Bahamas and not the US. And there's other policy issues there. We replied to the SEC's request for comment last year around broker dealers in the digital asset space. And we provided, some very specific recommendations, and one of which was including insurance.
Okay. Well, Raymond, is your guys' plan for the company to continue to develop products specifically for the crypto and currency space? So, for example, like a D&O product for a crypto exchange? Yeah.
So the crime theft product we built is a foundation, right?
Yeah.
A+ paper, Lloyd's cover holder. Going forward, I mean, we see the other areas of risk as being how we want to expand our product set going forward. We're going to have some announcements early next year. I won't go into specifics right now, but a lot of the coverages. So we think being known globally as, the leading underwriter in the space puts us in a very unique position. We have the underwriting team, we have a claims handling team, and we have a set of crypto natives, people who've actually built custody systems in this space. And we've solved what we think is the hardest piece, which is underwriting the theft and loss of the custody system itself. And from there, looking at other coverages would be a natural extension for us. And yeah, we're looking at all of those.
Wow, that's really cool. All right. Well, just a couple more questions for you here. But I read that you estimate less than 3% of digital assets held by custodians are insured. Less than 3% are insured. Seems low. Is that a disparity, a problem of supply or of demand?
Yeah, it's definitely supply.
Okay.
It's definitely supply. The market is also, there's a disconnect in the market, and that's really, to me, a role that retail brokers can play. It's one of there are companies operating out there who think they cannot get insurance, and that's not the case, right? So the retail broker can help educate those insureds to make them aware of crime theft policy or crime policies, D&O, E&O policies. You obviously want to solve the capacity problem or the supply problem, but there are solutions out there. Again, those are the things we're trying to help solve as well. But the reason that the percentages are so low is it does fundamentally come back to supply or capacity. And then if you think about why is that the case, there's a couple of reasons. It's a new industry, not a lot of actuarial data to rely on, not a lot of in-house expertise. If you think about all the people going into the crypto asset industry, what I've said many times is that, most of those people probably would never consider a career in insurance, let alone underwriting. And so you can begin to see a bit of the problem that the insurers and reinsurers have just on the resource side to understand these risks. And that's, again, it comes back to why there's it's a capacity or a supply problem.
Yep. And that means that it's ripe for opportunity. So, I mean, and I would just say that's why we've been very excited about raising the current round, having the amazing set of investors we have who all really believe that this is a massive opportunity to build a really needed insurance foundation for crypto assets going forward. Speaking of that round, do you guys have specific plans for that 14 mil? What you guys are going to do with it?
Yeah, no, well, several things. We're continuing to build out our underwriting team. We're developing and leading the market in terms of standards and data, and then building out other proprietary enabling technologies. And so a lot of these, we'll be seeing some more announcements from us coming out next year. But the funding was put in place to continue to expand our team and really go after this massive opportunity.
Cool. And where do you guys look for crypto insurance underwriters? Are you looking in the crypto world first and foremost, or are you looking in the insurance world to kind of teach folks that are newer to crypto how to underwrite it? Or how are you guys approaching that issue? Because it's obviously such a new topic that a lot of people are not well versed in.
No, it's a great question, and it's also the case where perhaps someone is really deep in crypto, doesn't even realize there is a career in insurance or underwriting that may really suit their skills and background and interests. To answer your question, it's all of the above.
Okay.
Because we're crypto natives and are extremely well connected and entrenched in almost all the companies in the space, we know a lot of the technical people. So that's certainly one area we look at. But insurance is unique. And so when we're looking for underwriters, we've had a bit of a mix. We've had people who've had careers in, let's say, cyber, who have a technical background, who also understand crypto, maybe as a hobbyist or a crypto enthusiast. So there isn't as steep of a learning curve.
Mm-hmm.
So I would say it's certainly people who are familiar with more of the technically oriented insurance areas or products. That's extremely helpful. As we build out other products, obviously things like D&O or tech E&O, that type of expertise also becomes important. But
totally,
we're looking both in the crypto world and the insurance world for underwriting to build out our underwriting team.
Okay.
And I would say our security team in general, because our security team sort of spans different areas of our company, and it's also a strong addition to our bench.
If I'm a retail broker and I'm working with some of the businesses or the entities that you mentioned that fall within your appetite, how would I get access to you? Should I go to your website and look to get appointed, or is there a process that you think a broker should take to look to get one of your policies to their insureds?
Yeah, the simplest thing is go to our website, evertas.com, reach out to us, and we'll certainly get in touch with you and figure out how to work together.
And is there a process that would make the underwriting go smoother? Like if I'm a broker, should I have a specific app that I get completed, or should I be aware of any specific details about the crypto exchange or the custodian that I'm looking at?
Yeah, great question. So we obviously have an application that we start with, and we actually then can ask additional or supplemental information because we want to be efficient with the insured's time. It's really important to us, and I'm sure the retail brokers would appreciate that as well.
Of course.
And the most important thing I would stress is, as I mentioned, I think in the onset of the call, which is understanding the business model. just make sure you understand the business model of the insured. And then, as we're going through the underwriting process, it's something as simple as making sure it's the right person contributing to the underwriting. So it's, someone from the technical area of the company, someone who's familiar with the business operations of the company. Giving this application to an office manager is typically not the right person to start with, because there's a lot of follow-up questions, and it becomes very obvious that that person is just simply going to be reaching out to other people to get the information needed, and it's just not very efficient.
Yeah.
So it's really about making sure the right people are there, and then like as you would for any other type of risk, is make sure you understand the financial aspects of the company. I mentioned if it's a startup, understanding the pitch material that was sent out, and engaging us early on, because it can sometimes be a very quick phone call where we might be able to help steer the retail broker in the right direction in terms of, is this something that's in our appetite or not?
Yeah. Well, that makes sense. Those are all very reasonable requests. So I appreciate you breaking that down. And Raymond, I appreciate you coming on. I glad we walked through all those steps. And I think there could be a pretty good contingent of brokers out there that approach you after this conversation. We always end with 5 rapid fire questions that are a combination of both personal and professional. So if you're ready for those, I will dive in.
Sure. I haven't seen them, so let's see what they are.
Okay. First question. I think this is, I'm really interested in your response here. What is your favorite type of cryptocurrency?
Oh, this is going to be a bit of a cop out, but I don't have one. I mean, we're agnostic, to be honest with you.
Okay.
So, personally, I don't have one, nor professionally do I have one.
Yeah.
So sorry if I disappoint you with my response.
It's all good. Well, we'll see what you think of the next question here, because I personally have been asked this question. I don't have a good response for it. Is there a specific type of cryptocurrency that you'd recommend investing in right now?
No. I'm not an investment advisor. That's why I'm half joking. I get that question a lot when I'm
sure.
I'm at holiday parties and people are saying, what do you think of this? I'm
Yeah.
like, you know what? I'm not an investment professional. And I would say that the fact that you're asking me means you probably should do more homework. There are a lot. Well, in all honesty, there are a lot of cryptocurrencies available in the market. If you're going to invest in one of them, whether it's technically or from like their value proposition, is do your homework. That's what I'll tell you. Do your homework. Understand that. On a more serious note, understand the team.
Mm-hmm.
If there is a team behind it, understand that team really well. That's incredibly important, because unfortunately you see things like rug pulls that are done, and investors who are not very happy at the end of the day.
Okay. The next question.
I hope I can answer the next 3.
I know we're 0 for 2, Raymond. We're 0 for 2. It's all right. This ne's a layup. So we're talking before we started recording, and you're in Chicago right now. Do you have a favorite restaurant in Chicago?
Oh, I do. I'm trying to think. I was there recently. The name is escaping me.
Do you know what type of food it was?
It was Pan-Asian. Perhaps in the back, I can look in the background here. The name, I should know the name. I apologize for that. But that question I can't answer you. I just don't remember the name.
All right. It's all right. We're
actually, I'll give you a bit of a cop-out answer.
Okay.
Because it's a place where, if you're in Chicago,
okay.
I was there recently. I had a great time. So it was more a combination of more of like the, especially if it's outside in Chicago where it's really cold a lot, unfortunately. It's called Punch Bowl Social. So this is not a place where you go for the food. It's more of the ambiance and a lot of just, for families or for adults, they have like just a great indoor environment, I would say. So that to me is as important as the food sometimes.
Okay.
So it's not it's kind of a fun place to go.
All right.
In the fun category.
Punch Bowl Social. Noted.
Yeah. Oh, actually, one restaurant I went to recently, the Ambassador West.
That was the Pan Asian one?
No, that's not. That's more of like American.
Okay.
So.
All right. Well, we got a couple good options
okay.
for the next Chicago trip. So when I was starting Evolve MGA, there's just so many moments I look back on fondly, and it's just there's so much learning and so much bonding and so much growth that goes into founding a company. When you look back on Evertas, is there a favorite moment that you had when starting the company? When you look back on, when you're putting everything together, is there a moment that you look back on that, like, that was just one of my favorite moments in building the company?
It probably moments plural, and I can tell you it comes in two different experiences, I would say, because the need is so massive. It's when you're talking to an insured and they're expressing to you the utter frustration they have in not having insurance solutions, and talking to a firm that understands their business, understands their risk, understands the technology, and you have someone saying, I can't tell you how good it feels to be on a call with someone who understands the space so well and can help us navigate, this insurance space. That's just a great feeling, right? Because you're helping solve a real need. And the other really has, I would say, come from just some of our investor discussions, where similarly they see the need, they see the opportunity, and they're as excited as we are to start solving. This massive need for an insurance platform in crypto. So those are kind of two general types of moments, I would say, that I find great.
That validation is real, and I'm not surprised that you guys are Lloyd's of London cover holder, just because they're the OGs in the space that have been writing the riskiest stuff from the beginning. So I think that's really cool, and I think that validation is something that is truly special, and it makes, because especially when you're in a brand new space, a lot of people don't take you seriously until, things start becoming more and more real and things catch on. And then, you look like the smartest guy in the room. So final question here for you, Raymond. What do you think Evertas will look like at the end of 2023?
Oh, great question, because we've just been doing a lot of our strategy work for the next couple of years. 2023, a lot more products, and we've touched on some of them. So really fleshing out a full set of insurance offerings for people in the crypto space. That's number one. So it's solving the market demand. Second is our team. So continuing to build out the strong team we have with some additional key hires. So it's continuing to invest in our infrastructure and our people. Third, we are bringing technology to the forefront. So we're going to be rolling out an updated portal, which we think is really going to streamline the underwriting application process. Those are kind of all, retail broker as well as insured facing, to kind of solve some of the inefficiencies in the underwriting space. So yeah, next year is going to be a great year for us, kind of from just building out our infrastructure, our products and services, and our team. Okay.
All very exciting stuff. Well, Raymond, I'm really glad that we chatted. I'm very interested in everything that you guys are doing. I think that there's a lot of similarities between what you're doing and what we've been doing in the cyber insurance space, and dealing with a lot of the same hurdles, the same educational elements. So it's a unique space to be, and I can totally empathize with a lot of what you're going through. And I look forward to staying connected. If you're in the Dallas area, you have to come through and say hi. Would love to grab a drink, grab some food.
That'd be great.
But with that said, Raymond, we can wrap this up right here.
Great, Pat. Thank you so much. And thank the audience as well for their time.
Of course. I'll talk to you soon.
Thank you.
Bye.
Please download, subscribe, and leave a review on whatever platform you are listening on. And feel free to reach out to me at pat@evolvedbrokerpodcast.com with any comments or suggestions for the podcast. Today's episode is sponsored by First Insurance Funding. First is the leading premium finance company in insurance and is known throughout the industry for their personalized service and quote flexibility. If you're tired of sending quote requests for smaller premiums to multiple companies, not leaving enough time to negotiate larger opportunities, then choose First as your primary financing source and experience the First difference today.